All right. Hey, good morning, everyone. Welcome, and as always, thank you for taking the time to join live. I always appreciate it when you guys are on the phone with us. I'm going to jump right into it, and we'll just kind of get started. As we digest what happened last Thursday in the report, um, I I I think I want to kind of put it in context for us just a little bit. Um, First, the acreage number was a complete shock, right? The USDA came in and said that farmers are only going to plant 89.5 million acres of corn, which is way below what they've planted in any recent year. And on the other side, they said the soybean acres are going to be way up, right? So on its face, the trade really reacted pretty appropriately, right? It bought corn and it sold beans because that makes sense. If you have too much of something, you need to get rid of it, and if you don't have enough of the other, you need to buy it, and the market can fix those spreads. But I don't think it's nearly that simple. Um, and then immediately at the same time, the USDA releases the quarterly stocks reports, and they say, "Hey, we've got plenty of supplies of corn, no problems here. Just we're good." And the market reacted to that appropriately on its face too, because it just started selling the front months, right? It sold May, it sold July, and it bought December, and that's what you should do. If you're in a situation where you have enough nearby supply, but you're worried about the future supply of corn, the market should encourage you to keep that nearby supply. So we call that carry. So we pound the front months down, we elevate the back months, and we put carry into the market, and we say we need you to store this stuff for us so that so that we can make it to our next bountiful harvest. And so that's the knee-jerk reaction. But it's a little bit like, and I'm gonna diverge here for just a second and go back to a few weeks ago in our life when our 13-year-old came home from a practice and said, "Hey, I've got this blister that's killing my foot," and we said, "So, right? It's a blister. Suck it up. Put a Band-Aid on it, tighten your shoe up, and go, right? It's just a blister." And he complained about it on Monday, and we said, "No, don't worry about it." He complained about it on Tuesday, and we said, "No, don't worry about it." Same thing Wednesday, same thing Thursday. And so he wrestled on his foot on Friday, and then we had to drive a couple of hours because he was going to sleep and then play a basketball tournament Saturday morning. And by the time we got to our hotel, his foot, he said, I can't walk. My foot is on fire. I can't put my shoe on. So we looked at it, and that spurred this whole ordeal where the poor kid had to have a weeks long of antibiotics every day. He had to go get his wound packed. He had to have surgery on his foot because his foot was literally being eaten by the MRSA virus. And we just didn't react fast enough to get ahead of it. And I really think that's exactly what our corn market's doing to itself. This is the big sideways move that we have since the peak that was made in late February. Here's the peak that was made in early March, and then here's the peak that was made on the 23rd of March. Right? Sorry, I'm in soybeans. Very similar chart pattern. Here's the big sideways move. Same peaks. Okay. Here's the peak that was made after the report. So this big long sideways move is like the market saying, "Hey, it's no big deal, right? We got nothing to worry about." When in reality, um, we're dealing with something that's never been dealt with before. So let me put it in perspective. On the same day as in current moment in prior major events that we've had, 2008, 2012, where we really spiked the price of corn and we had to ration demand, right? The reason we had to ration back then was really because of drought. But here this time, here we are on April 6th, and we're chopping along sideways, and we're more than $1 above where we were both in '08 and 12. And what's even crazier is the spreads are even stronger today than they were then. We have larger inverses today, even after we've pounded the front month of corn all the way down to a measly inverse of 40. We've taken 60 cents off of this inverse because, hey, we've got plenty of old crop supplies. Well, here's what the issue is that the USDA is working with numbers that have not yet reflected current circumstances. I'm not saying the USDA is wrong. I'm saying that they don't have the data in their system yet in order to show what the truth is. Because in Ukraine, in Europe, there's more than 15% of global caloric intake that's currently off the market between corn and wheat. Global caloric intake. Think about that for a second. That's like, just imagine going to your grocery store and the shelves are completely bare because you cannot get it no matter how much money you have in your bank account. It's not there for you to have. And that's what the world is trying to reconcile here. And our corn market is just chomping along saying, hey, we're maybe high enough. And so with these high spreads and high prices, you would think that we would start to ration, that somehow we would start to decline. And here's where the rub is. We've talked about this for months, is that every time we've ratcheted prices higher since 2020, we have seen the economic margin for buying a bushel of corn, grinding it and converting it to some other fuel source. We have seen the margin expand at every price elevation that we've seen, and it's still happening today. So I've been researching since 3:30 this morning and trying to find any article that hinted at any type of demand destruction, and I can't find one. There's nothing out there that suggests that we are slowing things down. So if you assume that the current stocks are sufficient to get us through new crop, and that new crop is going to be so good that we don't have a food problem here, then you have to be telling me that we are slowing something down. Because with the rest of the world in turmoil, with the largest and biggest drought in history in South America, with 15% of our caloric intake off the market in Europe, with those two things alone happening, we need to be rationing in the front and slowing down the grind, because we don't have any handle on either of the two major producing states, right? You've got South America, you've got the US, and you've got Ukraine. Ukraine's not going to plant their crop. There's no way they're going to get that crop to market. Ukraine's not. South America's crop is not yet harvested. We don't know what its yield's going to be, and so that leaves us. And so you've got literally billions of bushels that are being forced to come here to reconcile against that type of global catastrophe. And our corn market is just sitting here ho-hum, not doing anything, thinking, oh, hey, with the high prices we've got, surely we've already done enough. I don't think so at all. I think that this is Tuesday when you complain about a blister. This is probably Wednesday, and I think we're coming into that Friday night time period when you can't get your shoe on your foot because the MRSA virus is eating you alive. And what do you have to do? Well, you have to go get immediate action, and you gotta catapult into action, and you gotta get on top of it, right? So you have to do the only thing that you can do, which is go kill something. You have to go kill demand because there's not enough corn available or wheat to feed the world. You have to go take something off. And what is that thing going to be? Well, it has to be ethanol, because you can't take it out of the food supply because we have to have it. These sovereign governments are going to come and buy it, and there's no price that they won't pay for it, right? I mean, China doesn't care if they pay $10 a bushel, $12 a bushel, $50 a bushel. They don't care. They just print the money anyway and take it from somewhere else. They're a sovereign government. There's no way that an ethanol plant can compete with them. So that's the only industry that we have to go hire to take away. But you've got similar situations happening in the fuel market. So there's no room to give there either. So this explosion that I think is about to come is probably going to exceed even the prior expectations that we've had. So I don't buy for 1 second after reading, I don't know, 150 articles. I don't buy for 1 second the argument that we've got enough and that we're headed lower. In fact, I think that it is even more bullish than it ever has been at any point at any of these times. And the market hasn't figured it out yet because you've got so many people out there selling it like crazy. So let's think about soybeans here for a second too, as I keep talking. You know, soybeans had a shocking number, right? Hey, we're gonna plant so many soybeans, we have a wall of supply coming. Think about last summer when the USDA told us and the South American government told us we're gonna plant rainforest to rainforest soybeans. We're gonna have this wall of supply. We're gonna be huge. Well, our carryout in beans has just done nothing but get smaller. Why? Because at every price elevation that we've reached, what have we done to the crush margin? We continue to expand it. Today at $17 soybeans or $16 nearby soybeans, our crush margin is $2.50 a bushel. Like it's insanely profitable to crush them. Why? Because of the demand. It's so ridiculously strong from all of the oil situation. I can't even go into all the details. There's too many of them that are supporting soybeans, right? And now you've got this next issue, which is the caloric issue. Because if when you crush the bean, you've got the meal, which is calories, which you have to have, and you've got to replace it somehow with the food that you can't get from Ukraine. So fascinating trade activity right here on these 4 bars, right? So this is where I'm going to zoom in here because I think you got to see it clearly. This is new crop soybeans. This is November. This is Thursday. This is when the report came out. And this was a shocking number, right? That this could have taken our carryout from like 150 to 350. Like you're talking the difference between $16 beans and 8 on that carryout number. That's how big this shock is. And look at where we're trading. We're trading right back at the same level we were prior to the report. Guys, if beans trade back above this level, after taking that many acres on into our balance sheet, the market is sending us a signal that something is underpinning this with strength here, and that beans have got to go higher. So this is extremely bullish beans and extremely bullish corn. Look at what new crop corn is doing, right? New crop corn, here's the report day. Hey, we're planting 89.5 million acres. That takes us way below pipeline with a 180 yield. So that is so not bearish. There's no you shouldn't sell this thing with anybody's money because that's so not bearish. And now we're getting into some bearish numbers here, right? We got 13s, we got things that would traditionally call for consolidation. Well, new crop might consolidate just a little bit until beans decide that they don't want to give any acres up, and then they've got to go higher too. So I think we're getting ready to see this rally, but I think that the action is all going to be in July because that's the only month that you can really ration demand in. You've got to preserve those supplies, not by discounting them to new crop, because everybody sees that balance sheet looking forward, say, hey, we better buy it now, because if the farmer doesn't plant enough acres or get the weather, it may not be available because we're already below pipeline supplies. So you've got to go buy it right now. And here's the number that's amazing. 400 million bushels of old crop supply that gets bought through exports is enough to turn us to below pipeline. 400 million bushels. Let me put that in context. In the safrinha, or in the original, in the first corn crop in South America, they lost 1 billion. In Ukraine, they have over 15 million metric tons, which is 500 million bushels of old crop that they can't get out. And they have over 1 billion bushels that they're not going to plant or harvest or be able to bring to market in the next one. That's 1.5 billion. That's 2.5 billion bushels of corn that can't hit the export market. And 400 million is all it takes for us to turn negative. Now, the question I have is, has China already bought it? You know, back in here, back in this last consolidation, day after day after day, we heard rumor after rumor after rumor that China was buying through other entities quantities that were below the USDA daily reporting thresholds. And no one's ever confirmed that. But China's not stupid. They're smart. They're really good traders. And it wouldn't be a shock to me at all if we come up and we find out that they've already bought it all, that it's already spoken for, and that our actual inventories have already been purchased. And that's going to send us into that would send us into a complete frenzy. So here's the conclusion, and here's the point on both corn and beans. After the report, we sold it off. We're now back up to the top. Soybeans, same thing. Nearby soybeans with plenty of supply, with here's May, plenty of supply, no issues, la-di-da, we've got no problems. Here we are. We're right back to where we were after the big wall of supply gets announced by the USDA. That is extremely bullish, in my opinion. I don't see any reason why you would discount the fact that soybeans just put back on everything they took off in 2 days to say, nope, we're not giving the acres up because we've got to have the supply too. So I think that we are getting ready to ration corn and beans, and I think we got to go. I think we got to go turn those crush margins negative. So now, what about wheat, right? If it's so bullish wheat because all of it's off the market, why are we sitting here working sideways? Well, you know, a big sideways move like this usually means continuation, right? Consolidation means continuation. Our crop ratings are the second worst in history. Our acreage is as low as it's been in, one of the lowest in 100 years. The supply from the rest of the world is currently being redirected, right? Like shuffling the chairs on the Titanic. You know, you're just kind of moving them around a little bit in order to meet nearby needs. But make no mistake, there is not enough inventory of wheat to absorb the Ukraine and Russia not meeting the export markets because of sanction or war or whatever it is. And so the market's got to discount that in some way, and they've got to discount that by buying it in here. So if we get into through April, May, at some point the world's coming here to buy our wheat. And so I think wheat's got to go much, much higher in order to absorb it. It's just too many bullish dynamics that are unfolding before our eyes to look at any historical norm of a balance sheet and say we're all good. Because the risk right now is that those balance sheets continue to contract because there's so much supply offline in both South America and in Europe. That's the overall conclusion. So for the last 3 weeks, we've talked about, hey, probably in the next 6 to 8 weeks, we're going to peak this market out because South America is going to have great weather, great crop. We're going to get a huge crop planted, and we're going to have great weather. That still could be true. I mean, it could, right? But not until we confirm that we've got a lot more acres than 89.5 million planted in corn. That number is way too low. We've got to plant more than that. And until we do, we have to ration the supply in the front. So I don't see any way around it after anything else. So I would just buckle up and get ready for it, because I really don't know how high it has to go in order to stop it. So if I'm wrong because we sanction something, we eliminate the RFS, or we do something that crashes the price of gasoline, because that's the other way you can invert the ethanol margin, right? You can just collapse it. If we do that, then that would do the same job, and maybe that's what the corn market's been waiting on, right? Maybe that's the case. I don't know. Maybe it's been thinking, oh, the price of gas will come down, we'll hold right here, and we don't need to work higher because the gas is going to do the work for us. Well, it just hadn't happened. I mean, when you're getting shut off at the pump at $150 because it doesn't fill your car up, and the credit card companies aren't letting you do more than that. That's not slowing any demand down, right? You're just having to go back more often to the pump is all that's happening. So I don't think that's going to happen. I think you got to do it through corn prices, not fuel prices. But that would be to me, that's the only other alternative, because these export numbers are coming up. Okay, that's 20 minutes. I know that's really bullish, and probably more bullish than I want to be, but I don't want anybody to be surprised either if we just blow up out of here and start moving higher. If we do, you'll know why. If we don't and we work lower, something will materialize that will have caused that, and we don't know what that is today. So there is tremendous risk in trading these futures and options, right? So if you're doing it, you got to be careful, and you got to trade it in light of your own financial condition. We're happy to talk to you. We're happy to work through it anytime with you, and help you get positioned for what could be coming. I hope you guys have a great week. We will keep you posted, and we will keep you updated as things need. I hope you have a great week. Talk to you later.